Hey guys, welcome back. It's Alon here, and this is another weekly recap for Acorn Productions. First of all, I want to say thank you. We've got a few new copiers this week. I want to say thank you for joining. If you're watching, welcome. And if anyone else is watching, welcome to the channel. If it's your first time, if it's not, welcome back. And we can see, guys, that this month is a continuation of our best month yet. It is our only double-digit month. That's good or bad at the moment, and at the moment it's our only good month. Now there is a few days left, so we'll have to see how it finishes off. And I have been a little bit busy since last week working on the portfolio. There's a few small changes that we've been doing. I can't really call it small. It is a change to one of the core strategies of our portfolio, our chest. We didn't mention it last week, but essentially there has been, one thing that's been bothering me this year when I've been thinking about, what do I want to do different next year that hasn't really been giving me the results that I wanted this year. We've got 1 month left. We don't know what'll happen. We'll need to get about 5% in this last month to hit my goal of 20 to 40%. It is quite a lofty goal. It's not really easy to continuously get that sort of returns, but that's what I'm aspiring to do. And I've crunched some numbers and I think it's possible, but I had to tweak a certain part of the portfolio. We will recap most of it next week in the weekly recap, but let's have a look at what it looks like at the moment. If you guys don't remember, essentially the core portfolio, so for the chest, remember we've got the reserves, the chest, and the two horns. The reserves are our safe investments. So when we're talking about the reserves, we're talking about things like SPSB, which is corporate bonds. We're talking about TLT. We're talking about cash. These are things that are in reserves. TLT is long-term government bonds, so it's like safe as it gets. This is gold, IAU, silver. These are just cheaper ways to hold it, by the way. And these make up, let's say, our reserves. Nice, stable, safe. These are things that should actually possibly go up when stocks are going down, so that there's just really a counterbalance for our portfolio. And the rest of our portfolio is quite aggressive. So we've got our chest. Now, up until recently, our chest was ETFs. Pretty much markets. ETFs are pretty much baskets of companies put together. So you get, I guess, diversification from risk. But then I realized that diversification isn't really going to help us with beating the market, which is what we want to do. And the chest was underperforming this year, guys. Maybe it gave us a few percent, but it really wasn't performing the way I wanted to, especially when I'm diversifying with ETFs, and some ETFs are better than others. But I've decided to really double down on some core holdings: Microsoft, Tesla, Berkshire and Tesla are big holdings, Apple. These are really just mega companies that just continuously perform and do well and have smart people working for them, good corporate governance. These are really what I imagined when I thought my chest. Like the chest, if it was a battle, would be your strongest, best fighters holding the front lines. And these are what these companies are. I don't need crappy fighters. I don't need 100 diversified companies to de-risk. I need good, solid fighters that are going to give me good, solid returns, and more importantly, companies that I can close my eyes for 10 years and know they'll still be around. These are what I feel about these companies, and this is what I think would be important for my chest. Now, Berkshire was a holding from before, and essentially I've been back testing it. And the reason I've come to these 4 stocks is I've been back testing it for the past few years to see what's going to work, and looking at risk, pretty much looking at appreciation, looking at how much it fluctuates. That's what I mean by risk. And I've found a nice ratio that should get me to my goal. So hopefully the chest will get us about 40% return a year. That's what I'm hoping for. And then our horns are hopefully 80%. But obviously our horns these are our extra risky companies. So we got Microsoft, not Microsoft, MicroStrategies, Coinbase, Bitcoin, crypto. So these are, you're taking additional risk to get these additional returns. Now I'm going to go over the whole portfolio in a little bit more detail, and I've got some nice plans for next year, but I'm very interested to see how this month ends up, guys. Next week we're going to do a little bit of a longer video. We're going to recap the strategy. We're going to let you know where we've been going. We're heading the same way, but where we've come, what we've learned in the past year, what changes we've done. The next video will be a nice one for the recap, but more importantly, if you guys are still watching, whether it's your first time or welcome back, I really appreciate you. If you're copying, welcome. We're all gonna make money together, and I look forward to seeing you guys all next time. I appreciate it. Catch you later.